Welcome back. Today's lesson is lesson 15 about looking at the history of a stock. Now, there's two things I'm going to exclude from this lesson because there's full sections on them. One is fundamental analysis. We're going to talk all about that towards the end, and we're going to talk about all the news sources, all types of things, price targets from professionals, hedge funds. All that will be in the future. So that's going to be excluded from this. Also, what's going to be excluded are indicators, because indicators we're going to cover as a full unit in just a few lessons. So you should take this lesson into that one and have some knowledge on it. Now, again, I may reference that and be like, well, if Stoch is low, if Vortex is low as well, so on and so forth. But for this particular lesson, let's talk simply about price action history. Some topics we're going to cover in this lesson. First, we're going to talk about the types of reversals. It is a huge missed opportunity if you do not look back 180 days, a year, even 2 years sometimes, right? And see if the reversals are like bowls, like cup and handle kind of shapes. Are they really quick daggers? Are they mixed bag? What is it? Do they always do a double bottom? Does it always do a retest and then retest again, take off? You need to look into this. It takes 5 seconds to kind of look back, but again, to conceptualize and be like, well, this stock always does quick reversals. Then you know if it doesn't do a quick reversal, you should think about that and be like, well, something's up or something's changing, right? That's always important to understand. Secondly, we're going to look at the type of loading zones and areas of value and how we draw them. How many times does it go to the bottom, to the middle, to the top? Things like that, how to properly draw them. It comes down to your risk management policy, but I want to review that real quick in the lens of looking at the history of a stock. Thirdly, we're going to check out ATR real quick. ATR is going to be a big stop loss content here area. We're going to talk about that plenty in the future. But for this, let's talk about it again real quick. Really kind of drizzle this in real quick. So when you guys come to the stop loss section of this lesson, in this class, you're going to be much more well off seeing this now. Fourth, we talked about this a lesson or two ago. How does volume profile shifting change the history of a stock moving forward? Again, you're going to put the volume profile down first, and then in a few weeks you can reference it again. So it's almost like if you put it down, now, historically it can give you some accuracy and some insight. Otherwise, it's going to need to wait until a few weeks later. But again, that's going to show you some great stuff. Next, earnings reports and reactions. It kind of comes down to the stock itself and the time period. A lot of stocks nowadays are dropping down when it comes to earnings. They just kind of plummet due to COVID. It's super important to understand that sometimes earnings just kills a stock. Sometimes it makes it go up. Again, let's look at that and let's kind of check and see if we can find those things on a stock ticker. And then lastly, we're going to talk about how retests happen on ascending channels, on ones that break out and come back down. Does it historically have success with retests? Has there ever been a retest? Do any supports only act as resistances or as supports? These are important things to answer that we didn't really cover so far, but want to kind of drizzle these on there as some extra things you need to look for. So this may be a quicker lesson. I think it may be about the same length, but again, I want to give you this kind of knowledge, these tools that you may not ever think about. These are questions you may not have even thought about asking. So again, these are great things for you to have in your tool belt. Eventually, you'll kind of intrinsically put this in your head, and it'll be part of your edge, right? If you can slowly sharpen these things, your edge will slowly get sharper. You'll have more success. With no further ado, let's look at reversal types. So first, let's take a look at AAP, and this won't take very long. I want you to understand that a stock will most likely reverse the same way every single time, especially on the 180-day chart. Now, it's not going to be consistent 100% of the time. You can never expect it to be 100% of the time. That's, impossible. But let's take a look at AAP real quick. When it comes to reversals, we could easily set our supports and resistances, but I want to just focus on price action. We can see over here, extremely quick, right? This was maybe 4 days, but it was big dip down, came right back. Over here was a bowl shape. So this is a little bit different, this one, right? Really quick, but took its time. Over here, really quick, right? Came down like a dagger, came down like a dagger, came down like a dagger, came down like a dagger. So what am I getting at? So I want you to understand that if a stock reverses quickly in the past, it has a higher chance to then reverse quickly in the future or the present. So again, as we go through this and you look at other stocks, make sure you understand to always check the reversal type. Quick, slow, bullish, does it make a shape? Does it come up and come down? Always check that. Let's look back at it. What you can also do, because we can see it makes very quick reversals, go to the beginning of the reversal. You can go from peak to peak if you want to. That's 15 days. From here to here, 14 days, from here to here, 21 days from here to here, 13 days from here to here, 13 days, and from here to here, 8 days. And again, so you can measure how long peak to peak it is from descension to all the way to ascension. You could also do peak to bottom. This was 10 days. This was 12 days. This was about 7 days. This one was about 6 days. So again, measure that out. It helps you put in a frame of reference of your swinging. Let's also do our full time from bottom to bottom. So over here we have 4 days from our bottom to reversing, 5 days from our bottom over here to reversing, 3 days, here to here, 6 days, here to here, 6 days, here to here, about 5 days. So what am I getting at? It's crucial to do this because if you want to swing trade a stock, if your alert goes off, the alert says, bink, it's in buying zone. You go back and you look and it takes 3 to 4 days to go from red, greenish, to then go off. You know you have 3 to 4 days on average. You can always put in early. I like to go in a little bit early before volume kicks in, and then you take off, right? It takes 10 seconds. But again, to measure this stuff and go, all right, from peak to peak was 15 days, but from peak to bottom was 5 days. So I know once it hits the bottom, I have a possible 9-day holding period to get a full move, right? Let's check the next one. So ACCD, we could go through and I could easily put all the supports on, but again, let's look strictly at price action. So we have our reversals. As we can see, it looks a lot different than the other one, right? They take a lot more time, more bullish, and there are some ones that are mixed in here. So let's look over here. When we had our previous price action, this reversal would take 8 days. This one would take 7 days. We'll go from here to here. This was 12 days. This was 16 days. This whole move was 14 days. This reversal, 15 days. This reversal was 15 days. So we can even see as time has gone on, the last 4 months, the reversals take much longer. I would take this into consideration. Obviously, there's a trend line and some supports, but from this down to the bottom was 32 days. This down to its bottom, 19 days. This drop, 12 days. This drop, 8 days. So you can see it's getting quicker on the reversals. Every single time, it's gotten quicker. And you may never even thought about looking at this, but it's super critical for you to understand that every reversal is getting much quicker. That's the great news. I mean, I guess you can go to here to here, and that's still 32, 16, 17, now getting close to 8 days over here. So always make sure you do that and check the dates on these, how long these things take. You always do bottom to bottom for a full move. So that was 39 days. This was 62 days. This was 24 days. So you have no real clear idea about this one, but again, it takes time. You have to measure these things. Also look at the shape right here. This is definitely looking much more like a bowl. This looks almost like a bowl. This is like a dagger. This one's pretty quick. This one is developing into a bowl. So again, measure the shape, measure peak to peak, bottom to bottom. All those things are super, super critical. Let's look at one more. AUPH is a nice pharma play. We called it twice and made money. But let's look at the reversals again. Let's go over here. Nice bowl shape. Nice bowl shape. Bowl shape. Bold shape. Many of these are going to take many days to reverse. Right over here, this whole reversal will be over this whole entire area would be considered a reversal. This whole entire area right here is a reversal. This whole area is a reversal, a reversal. So it's very important for you to check the shape, how long they take, and measure these things out to be extremely successful. Because again, I like to get in early before volume hits, because that's how you get big spikes when volume takes off. I get in, a few days before the reversal takes place. So if I see a dagger one that always constantly makes little daggers and little divots, I'll get in, as it kind of shows some life just a little bit, I get in and rod it up. If it's much more of a bowl shape, I want to get in at the bottom of the bowl where I see a little bit of green and then wait. Right, so there's different ways of doing this, but you always need to measure peak to peak, peak to bottom, and bottom to bottom, and then do the shape and see how long it takes to really kind of time out your entries. It's a very quick step. It takes maybe 10 to 15 seconds to really kind of check this, but it's critical. Let's check the next thing. APXT has been a great trade for us. I want you to look at this area over here in particular. Look over here, we have multiple options. We can do a trend line from here to here. That looks really good. I like that. And let's do our loading zone. One would then put it probably right about here. Looking good. The only problem is this channel is almost 7% wide. So how would you play this correctly, in my opinion? It's super important to understand if a ticker has done something 100% of the time, it does not mean it will do in the future 100% of the time. It should be considered that it likes to do this more often than not, and that you should play into it, because then you can kind of plan your stop losses and supports better and your price targets better. But something like APXT, where you have such a wide channel to buy into, I like to count how many times it's reversed at the top line compared to the bottom line, right? If it does it more times than not at the top line, I'm more inclined to buy there. If it usually waits to the bottom, I like to go in the bottom. So let's check this out more in depth. So APXT, this would be our loading zone. So far it's gone down once and then twice at the bottom, but it's done it once and twice at the top line. So what do? I'm currently trying to trade this, and as I can see, it's broken down beneath it, not showing much life here. I'm then going to take and measure like I just did. A reversal here takes 7 days. A reversal at tap down at the bottom takes 5 days. This reversal, when it tapped down first and took off, took 7 days. So we have 5 days, 7 days, and 7 days. I'm currently in day 3, so what am I going to do? The reversal has taken no less than 5 days. I know I have about 2 days to make a decision. I can watch for 2 days, be comfortable, not stressed. I'm not going to be like, oh man, what's it going to do? I now have 2 extra days, if not 4 extra days, to watch this. If it dips down farther, I'm just going to wait. No problem. And if it comes back with some vengeance, I just buy in and I get the full move from the bottom to the top of where it was. If it reverses tomorrow and has a big green candle, I miss it. I missed it, right? And that's okay. I'm playing the long game here. We're swinging for one big move. It takes 5 days to reverse. I have 2 lines. I'm going to let the whole thing play out, knowing that it has 2 more days. If it drops down farther, I buy in. If it takes off tomorrow with a little bit of life there, I buy in. If it blasts off, I miss it. Easy as that, right? Let's check the next one. Next is ADPT. I'm going to draw some trend lines with you because I wanted to show you how I would play some of these upward channels sometimes that have really clear areas. But again, if you miss the move, you don't want to wait almost 3 months for a new entry line. So this is obviously right about here, a great trend line. Great trend line right about here. It breaks a little bit, but that's okay. It comes right back. I'm going to duplicate and move up. Right about there looks good. That's a good support resistance area. Maybe a little bit lower, right about there. And then again, duplicate, and I'm going to put a lid on it. I'd put it anywhere right about here. Looking good. So this would be your buy-in zone, right? You can buy in here. You can buy in here. Looks good. But here's the problem. This is also 11%. So what would I do? You'll see on a stock like ADPT, the bottom line is extremely consistent. It usually hits the bottom 100% of the times for a good buy-in. So what I would do, as I've shown you, but again, I want to reiterate, that middle line, that top line, I'm going to make it a whole new thing, and I'm going to go from there. Let me show you. So here's our buying zone. Looks really good. This line is a great buying zone as well, but the success rate, made money there, made money, but it wasn't really clear, and then it died. Again, made money, and then died. So we're batting about a 4 wins, 2 loss area. So what I'm going to do is just make it a dotted line and white. This lets me know that this is a very good area for support and resistance to buy into. I'm also going to track and see from the bottom to the top. That's a 100% successful move. From the bottom, successful. From the bottom, successful. Over here, it does bounce, and it comes back down. So we have a very strong channel here, and I know that there's a pretty high chance that it may hit this line and survive. I'm also going to look from this line, what's the average returns. From here up was 12%, from here up 10, from here up 9. We also had a fake out here. Then you can see you bought in here, would have made 20, bought in here, would have made 32, and then over here. So far, 5 out of 5 times we made money buying at the dotted line, and then 1, 2, 3 times at the bottom line we made money. So this is a great area to buy into. It gives you a solid stop loss. This is definitely going to be your resistance. So as you go through these, you may want to have a channel this big, and that's totally fine. But you could have also bought in here, and you would have made a full move, but you also would have bought in here again and would have lost 11%. So it's nice to reiterate this and say, this is a perfect play. It's not your best play, but a loading zone this large doesn't make sense. So make it a resistance and support line instead of a full loading zone. Pretty easy concept. Just make sure that you don't have massive loading zones, and then again, split them up sometimes. Next, let's discuss ATR quickly. ATR is an indicator like anything else. all it's going to show you is how big the candles are and how much dollar sign they move on average. So you can take this number, that's going to show you an actual number, that's a dollar amount. That's how much the 4-hour candle on this time chart moves in one period, right? So if you have two 4-hour candles and it says $1, the average movement of a stock like this is $2, right? So if the ATR is 50 cents, 2 candles equal $1. The average daily movement combined with the candles is maximum $1 usually. Let me show you in action. So PSNL has been on an obvious uptrend. We've been playing it off my Discord plenty. It's a great stock. If you go to studies, edit studies, and add ATR, ATR is usually used for our stop losses, and this will be part of the lesson that we cover in the future. But as we can see, it mirrors basically the image above, right? Pretty well. But again, it's not perfect, and it's not supposed to be used to like buy in or anything. It's supposed to give you the average candle dollar amount, right? So every single candle, you can come over here, and you can be like, all right, well, this candle moved $4. This one only moved $1.56. This one only moved 91 cents. And you can go through and measure all of them and calculate them yourself, or you can just use ATR. ATR is going to use the last one, 180 candles and their size, and then put it into this one. The next candle will take off the last one and add that movement. So it shows you the average 180-day 4-hour candle ATR size, so how big they move. Right now it's at $1.63, as you can see. So this candle has the possibility of moving on average $1.63. Right now it's at $1.68. That makes sense. It's been moving less and less. Over here, when it was about $2.21, right, $2.17, this candle right here was about $3.96, and this one was about, $1.92, $2.17, right? So it gives you the average total range, ATR, average total range of this candle. And so you would say, all right, there's 2 4-hour candles inside of a trading day, right? There's 8 hours it's open. So today I can expect the movement of PSNL to be $1.63 times 2, which is about $3.23, right? Am I good at math? No. So ATR is just going to tell us the average candle size, average true range. There are 2 candles on the 4-hour chart in every single trading day. So looking at it, PSNL's average true range for one candle is $1.63. So what could we do with this? ATR is going to tell us, again, how much movement for one candle. There are 2 4-hour candles in a trading day. So it's $1.63. You can then say, all right, it's $1.63 on average in this time period. $1.63 times 2 will get us $3.26. So if you want to really set a good stop loss, which we'll talk about in the future, it should be $3.26 plus some change on top of that, right? But again, if you know that the average movement's $3.26, you can then also start to plan out some stuff like this, and I'll show you. If we know the average movement of one candle is $1.63, let's say the candle stops here. I come over and move my cursor up and say, well, there's $1.65. I can expect on a green candle moving forward will net me $3.79. Over here, on this big run up, we can see the ATR over here was $1.50. So if I see right here, I want to make, there's a big green push. We can see this right here. This one candle was $1.48, $6 is $1.81 overall. I can say, all right, I can expect to make 4%. This one over here, the ATR was about 162. I buy in here. I moved up $3.13, more than expected, so 7%. So again, you can start to understand how you can start tracking the size of the candles, and then how the ATR can show you how much percentage you should make on a full move on a candle. Let's check one more. So CCIV is really popular right now. Maybe in the future when you watch this class, it's going to be. This is why it's important to understand. Over here, pretty sporadic. You can see how ATR is not very useful over here. But then we get over here, we can start planning out our profits, right? If we know that the average candle moves $2.56 on this particular stock right now, let's say it ends right here. We go up. All right, I want $2.56. An average move is going to be about, anywhere there, 7.67%. But if it continues to be red, we also know that that's going to also net us a negative, 8%, right? So on these big stocks like this that keep moving up and down, this is also extremely useful for you, because if you want to start playing these hype stocks, you need to have smart stop losses. Like over here, it just kind of took off and just tanked on us. ATR, or average true range, can really help you, right? So that measures the size of the candle. So we've measured so far how long it takes to reverse, and how big candles are. Let's look at the next item. So we can see how we can measure the length it takes to reverse and the shape of reversals and even the size of candles. If you want to really get into stop losses and really get into how long you're going to take and what your profit target should be, you know, if it's on a green streak up and the ATR is $1, you know, hey, in 3 or 4 good green days, that's going to be $5 or $6 moves. That's an equal what kind of percentage, right? So ATR is really important to understand. It's really good for stop losses, but again, it's also really good to plan your potential targets, price targets for a given reversal, right? Next, we've talked about it quickly, but let's cover it one more time, volume profile shifts. So this is AMRX. It's been a really good channel play. Sadly, it's taken off, so it may not come back down to us, but again, with the supports being broken, maybe we get a new trend out of this. It's a great stock, but we have our volume profile down here, our first support we're watching, and then our area of value based on volume profile. Let's re-put on our volume profile. Now this volume profile has been here for months now, way over some weeks. We apply it again, and now where is it? As we can see, we've talked about this, it has shifted up. Now even the area value kind of shifted up a tiny bit. Again, pro tip, we make a channel, the 1 dot is the one that you can move. So align the 2 dots first, and then the 1 dot can be moved. That's shifted up, that shows strength, and then our POC has also shifted up. What's this mean again in layman's terms? The POC moving up is huge. Firstly, it's gravitational. If it moves up higher, that means that any price action that dips below it has a higher chance of getting pulled up back to where it is now instead of getting pulled down. And then secondly, it means that people are willing to buy it and sell it higher. Before, they wanted to buy it low and sell high. Now, it's showing us that folks are willing to buy high and sell even higher, right? It's showing that the average volume has gone from $4.20 to $4.80. The volume has increased higher, showing folks are willing to buy this product or the service or this ticker higher than before. When the POC shifts up, that's a huge sign of strength, a great use of historical data to really show some good strength. Let's check one more. We played AQB quite a few times. Right now it's broken our trend line, so again, that needs to be reset. We'll see what it does, but we have our volume profile down here. We're gonna then go to studies. Again, we've been playing this for weeks now. Volume P, put it on there. Apply, and where is it? Well, we can see that our area value has definitely shifted up. Again, put the 2 dots there. Actually, they line up perfectly. That's nice. Your POC has now shown you. Folks before were willing to buy and sell and stick around $4.05. Folks are now willing to buy and sell closer to $9.50, almost doubling where the volume's going to take place at. So some news catalyst, something came out, you know, it had a really good earnings report, but folks are not willing to buy it at $9 when before folks were willing to buy it at $4. That shows strength. When the POC moves up, it's a huge sign of strength. So something I want to touch on quickly as well is that sometimes supports and resistances will only act as supports and resistances. Now it's a rarity and sometimes it does happen, but I want to point out to you. For example, we can come here to a TEVA, TEVA. We've talked about that briefly as well on here. We'll take our price level here, and this is a area of support right there. What's important is that we have one above it right about here. A little bit higher looks like. Right about here is good. Right. Has this line down here ever acted as a resistance? Looking at it, it was a support, not the same line. It wasn't a resistance, it was broke through. You know, it came back just fine. 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 Not once was this line considered a resistance. Maybe up here, but that was a full move of 3%. So, you know, it's a little bit. What I do sometimes if I see a line only acting as a support or acting as a resistance, I make it dotted as well. You can also make it a different color if you like to, like a green, maybe a gray, a blue possibly, right? Let yourself know that this line is acting only as a support or a resistance. You can also type in the box here and just put only support, right? And then there you go. So now you know ahead of time this only acts as a support or resistance. That way if you see it coming up, you're like, yeah, I'm not worried about it. And it keeps going through. So a small thing, if you see a line only acting as a support or a resistance, it's always smart to label that so you don't get confused. There's a lot of opinions on how to play earnings. It's a strictly fundamental thing, right? When a company reports that it did well, it goes up. And when they say they do bad, it goes down. Not all the time. Again, that's definitely something that a lot of people will say. They'll be like, oh yeah, a company did well, buy in, go along, right? That's not how this works. There's plenty of times a company reports back great earnings, but then they just drops off, right? Because sometimes they go, this company did well, we killed it. CEO, insider trading, folks take profits, that triggers a bunch of stop losses, and then it collapses on you, right? You may not, you may have a news source that's biased, you never know. So with earnings, my rule of thumb is never hold through earnings. You may want to, you may be like, this company's killing it. It may pay off more times than not, but you're gonna get burned quite a lot more than you think you're gonna get burned. With that also being said, our whole entire strategy is based off the idea of having more wins than losses and our small wins being larger than our small losses. That's how you succeed in this. Playing through earnings will not get you this, right? I'll show you real quick, but earnings are always predictable. You can kind of technically analysis them, but don't hold through earnings, ever. Here's SWI. On Thinkorswim, you can see down here that the red and blue dots are earning calls, green are dividends. So we can see right here, SWI on this call did very well, and it jumped up almost 17%. It killed it. But what did it do right afterwards? It crashed down. Over here, it also had a big old earnings play. Hey, we're doing well. It crashed down, and what did it do? It came right back. So what's the point? In the stock market, every reaction is an overreaction. I'll say it one more time. Think about it. Think. Every reaction is an overreaction. So earnings plays, the goal is never to hold through them, but to buy in, play that run up, right? We're like, oh, earnings is in 2 weeks. Let's hold it. A day or two beforehand, you cut, you sell it, and then the thing either drops or takes off. Either way, 8 out of 10 times, it comes right back to where it was, right? If a stock crashes 15%, you can then wait for a sign of life, buy in. If it's near a support or a trend line, if it lines up well, you buy back in, and that overreaction comes right back, right? We do not hold through earnings. We wait for them to report, drop, and then buy back in. I got one more for you. So we've talked about SSRM, and again, it's a great stock. We can see we had a earnings run up. It says, oh man, we did really good on earnings. Woo, 15%. What did it do the next day? It dropped off right back to where it was. Over here, you can see it had a huge run up to earnings. Look at a huge run up, and then it collapsed almost 22% and then made its way back up. So again, we do not hold through earnings. We sell right before and buy back in if it drops, and then we make our money off of that. We do not hold through them. You can easily see too, historically, they have massive moves up and down. Too much volatility. Of course, if you can get in early in the morning, this was a good support area, has earnings, it shows some green, you can go long for sure and try and do that. But that's a lot of guessing. I would rather, play the build up and then buy back in when it comes back down. And lastly, to look at really quickly, old trend lines or old supports or old volume profile lines, they will be retested, right? The market wants to kind of come down and be like, ooh, this was a nice channel up, we broke above it, is this gonna live? Oh, I guess it is. We're on an ascending triangle, right? Ooh, that was a good resistance, we broke that. Will it live again? Ooh, I guess it will, right? Retest plays are huge. Let's check that out real quick. So we talked about CAT quite a lot in this, and again, it's a great example of how retesting resistances is a great way for historical knowledge into building in where you should buy at. Let's do our supports and resistances really quick here. That's one. That's one. This is definitely one right about here. Let's scoot over. This is definitely one. This was one. This is probably more than I'd usually draw, but it's a good example to show you. And this was one, right about there. And here's one. So why is this important? Well, let's zoom in real quick. Every single time over here, we can see that this old support, right, this was a resistance over here, was a resistance, right, came down, tested it, broke, tested it, broke, tested it and lived. Then this became a resistance, tested it, lived, broke it. This old resistance became a support. This old resistance became a support. This old resistance became a support, so on and so forth. You're going to see plenty of times old resistance becomes a support. That happens very, very often. You need to understand that. Historically, find your supports and resistances. If it does have a history like CAT does of retesting resistances to take off, where do you buy in at? Cue Jeopardy music. You buy back in at the resistance retest, right? This was a resistance. It came down, tapped it. You bought back in. You'd be up right now 8% on a great lovely, easy moving stock, right? You throw in your channel plays as well. You throw this in, you say that's a good trend line right there. They line up perfectly, boom, you win every time. Let's check one more. And the last stock for the day is Aqua. Again, we have a nice looking trend line. You can say right here is looking really good. We called it the other day, bought in, made some money, looking really nice here. This over here was a very, very strong resistance moving forward, right? It's come over here, tapped it, broke it, tapped it, and now again, it's retesting it and it's living. So again, we talk about this all the time. There's our charting. You need to always be ready for a retest play. Old supports become new resistances. Old resistances become new supports. Again, we talk about this 5 or 6 times, but it's very important to understand historically your resistances, your old supports, your old channel lines, your old trend lines will be retested often. So there you go. A very quick, very almost like kind of like loosey-goosey look at this. But again, a super important thing to understand. Firstly, there are different types and sizes of reversals. Sometimes they're sharp and quick, sometimes they're like a bowl. And again, we're going to get kind of in more into some reversal types later on in the lesson. You could easily pick up a book or even a PDF online and look at some. But again, they're going to have shapes, they're going to have sizes, they're going to have quicknesses. You need to measure peak to peak of that reversal, peak to bottom of that reversal, and then bottom to bottom, right? Give yourself some time. Be like, all right, this reversal takes 5 to 7 days. It's day 3. I know I have about 2 more days to watch it and reflect on it, right? This is not a race. It's a marathon. Very important to check these things. We also covered proper loading zones again. We talk about that a lot, but it's important to understand that if the loading zone's 15, 10, 7%, sometimes it makes more sense to make the loading zone smaller if it's successful and then put a new resistance or support line above it. And then if that's more successful, you can buy that as a bounce play almost. But you need to make sure that the reversal areas make sense, they live a lot, and they're good to go. We also looked at ATR, average true range. It gives you a candle amount. That candle, if it's $1 or $2, it tells you that. You can use that as a good stop loss. You can use that also as historical data. If the uptrend takes 5 or 6 days, you can see that the candle's $1. If it has a good uptrend of 5 green candles, you'll make $5, right? So it's good to measure those things out. Check with that before you set a stop loss or you set your price target for sure. We also looked at volume profile shifts. We talked about that before, but this also, again, just to reiterate, when the POC goes up, when that area value goes up, that's a sign of strength, right? This is all about supply and demand. Folks are demanding it at a higher price. Folks are supplying it at a higher price. That's good for you. If POC shifts up, don't really change your strategy all that much. Just know you got a good stock. We also looked at historical success rates of supports and resistances. It's crucial to understand. It's a rarity, but sometimes a support or a resistance will only act as a support or a resistance, right? Most of these are going to act as supports and resistances, but if you have a line that only acts as one, color it different, just drop down and say that. That way, if it's like only acts as a support and that line's coming up and looks like a resistance and it's not, do not sell too early. That's super crucial. We also looked at how we do not hold through earnings. That's a dumb thing to do. Even if the company is killing it, investors may not see it that way. So make sure you always sell before earnings. Let it play out. If it dips down, you just buy that dip if it makes sense. If it's in channel, if it's in trend line, if it's at support, you can buy that dip and make a lot of money. Don't be bag holding on earnings days. That's stupid. And lastly, we talked about another very simple concept that we have covered, but historically, check and see if resistances act as new supports often, if trend lines get retested often, all those types of things. Retest plays are a massive, massive tool you can use. Make sure you check and see if that makes sense and that lines up with the ticker you're looking at. That is it for this lesson. Your next lesson 16 is most likely one of the most important to you. It's all about convergence. I talked about this briefly on my YouTube, but I really want to reiterate these points. So again, take a second, reflect, think about your edge, add these things to your tool belt, but get prepared. Convergence is one of my favorite things. Let's check it out next.